Here with the Bullish Bears team. This video is going to be about how to trade double bottom patterns. So double bottom patterns form as price kind of falls, forms kind of a base level, kind of gets a move back up again, and then comes back down and retest at previous base level or support level. All right, so creating basically two bases or two support levels, or it's retesting support. So you'll see price coming down on this example, forms and kind of forms a base or gets a support level, moves back up, comes back down, and that level retests the previous support level, creating a double bottom. Now, typically they're co-equal or like really close together. It could be off by a little bit, but a double bottom doesn't have to be perfect. It doesn't have to match up completely perfect, but you'll see it kind of just matches, kind of like when price comes down, it matches that previous support level. So with double bottoms, they are a bullish pattern. So when price goes back up and kind of goes and breaks above kind of that middle level or peak level, so as price is falling, kind of goes up and it kind of rejects, comes back down. When price moves up again and breaks this previous kind of mid level right over in here, that's when you take a long position. And then you would use a candlestick close below this second base or support level as a stop. Now again, obviously, everybody's risk management is different. That's just kind of the typical way to trade it. But if you're trading options, you might use it. If price kind of goes against you, you might exit sooner. And so you'll see many of times price will go and it'll break out, and it comes back down and retests. So the other thing you can do as well is wait for the retest. So you can go long as price breaks above the center of that double top, or you can watch for the retest to hold. And once it holds, many times it'll form flags or those consolidation areas. Then you can kind of wait for it to continue up to go long as well. But typically, the long entry will be when price breaks above kind of the center of that double top or double bottom area. And you'll see again, many a times, there's patterns within patterns. You'll see within a double bottom, many a times it'll turn into a kind of a cup and handle-ish pattern where it's kind of that rounded bottom. So that's just your typical way to trade a double bottom when price goes and breaks above the center. Or again, you can wait for the retest. But, when you also, kind of zoom out, you'll see things like, there's a double bottom. You could call this, kind of this area as well. You can say that's a triple bottom, or you can call this one area a double bottom, or you can see right over here. Just, kind of just looking at charts, you can kind of just see areas, right here, double bottom, price goes up. And as it breaks out over here, that's where many times you want to wait for a retest, because you can catch it right here and you'll see there was a fake out and kind of fell back down. So that's why you don't just always trade things blindly. But again, sometimes, that's where you have to know other support and resistance levels. You don't just get in. So just because something shows a pattern doesn't mean you get in and trade it. But you'll see double bottoms on all different chart time frames. Again, it's kind of price going down, kind of forming a support level, moving up, coming back down, and retesting it. And as price goes up, if you're bullish on something, you want to see it continue up, not fail back down. But you'll see even with this one right here, kind of went up, came back down, but it never closed below the support level, and then it went back up again. So that's really how you trade a double bottom pattern. Again, it is a bullish pattern, and you'll see many times it forms into other patterns such as the cup and hand.